My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Every day, we keep having the same debate about the health of the economy. And it makes you feel like we're balanced on the edge of a knife. But after a session where the Dow dropped 160 points, sell. The S&P backslid 0.49%, and the NASDAQ lost 0.80%. Really ugly day. You need to understand that the economy doesn't work like that. It's not like we're teetering between good and bad. As long as employment stays strong, we're going to have one set of good numbers from domestic companies that are doing just fine. As long as the trade war continues, we'll have another set of bad numbers from companies that are hostage to the global economy and are beginning to do terribly. Today, the bad set won out when a Chinese trade delegation went home early instead of hanging out with some farmers in Montana. Suddenly, the market rolled over because a lot of investors believed that until the big sky country darkened, we might be close to a deal. But there's no accord on the horizon. I keep telling you that. If China won't even do something as low stakes as this farm visit, hence today's sell-off, as I've told you repeatedly, it's going to be a lot harder to reach an accommodation with the People's Republic than many people seem to think. You know what? That's a good place to start our game plan for next week, because I think there could be a lot of very important news this very weekend that may impact Monday's trading. For example, there's going to be news in Hong Kong. For months now, we've been seeing riots in the streets every weekend, as the people of Hong Kong don't seem to be too thrilled about being a virtual colony of the People's Republic. So far, the Communist Party has shown an unusual level of restraint, don't you think? But now we're getting mighty close to the 70th anniversary of the People's Republic formation, October 1st, a very important day in China. I think the military may start taking a more aggressive posture beginning this weekend. They don't want these embarrassing protests to continue during an important milestone for the regime. What else? On Monday, we'll get estimates by brokerage houses on how well Apple's new iPhone, the 11, is selling. I suspect the numbers will be put in a disappointing light, even if they're good, because the expectations have gotten a little unrealistic going to the launch. Honestly, though, that's not the important part of the story. What really matters is all the new service revenue and the new watch. I picked one up today. I cannot believe how easy it is. It's much better face than this. It's a lot easier to scroll through. Anyway. It's flying off the shelves. When I visited CEO Tim Cook and his team at the newly renovated store on Fifth Avenue today, I had a blast looking at all the new products. Do you know that 900 people work at this 24-hour wonder of a store? Still got the same Steve Jobs design cube, by the way. Doesn't matter. We know how these launches work. The most negative voices will be the loudest, and the stock's likely to get hit. I think it already started with the stock down more than $3 today. Don't be shaken out. Like I always tell you, own Apple, don't trade it. Although I believe you will be tested, sorely tested again next week by the Apple bashers who always come out of the woodwork when the phone is in, let's say, selling in the first 5 days. And then, of course, now we've got the chartists who smell a broken chart. Sheesh. All right, Tuesday should be good, because we hear from a host of domestic companies. Yes, domestic consumer-oriented companies. And I think they're actually in excellent shape. And then we're going to get results from CarMax, the used car dealer, and then AutoZone, the do-it-yourself auto parts chain that keeps buying back the stock in an incredible, alacrity pace. Now, both stocks have been big winners. However, sometimes these two tend to trade badly on the day they report, even in the wake of strong numbers. They only start rallying after the initial dip. If you like CarMax or if you like AutoZone, I would buy some before they report and some right into their swoons. I am endorsing that. We hear from Nike after the close, and this stock's been held back because of worries about a potential slowdown in China or the U.S. No one knows where. Management hasn't been able to fully put it to rest no matter what they do. I see no evidence of either slowdown, and I bet Nike's shares could soar if they just say things remain strong around the globe. You want the best company that most people have never heard of that's going to report this week? There's a sleeper company called Cintas. Sometimes you see the trucks on the road. Cintas is the uniform rental service. A little over 2 years ago, Cintas was allowed, bizarrely, to merge with its main rival. We immediately, of course, championed it because we love monopolies. And the stock's been an awesome performer ever since. The job market's still strong. I think we're going to get another terrific quarter. Wednesday, we get a read on housing. When long-term interest rates plummeted over the summer, a lot of people assumed that housing would come right back. But we haven't really seen that until very recently, like yesterday's robust existing home sales number. You know what? That's good news for an old Cramer fave, KB Home, which reports in the afternoon. The stock just made a new 52-week high today, so it's not exactly undiscovered. But even after this run, the home builders remain cheap. Still, I expect KB to sell off after earnings because the analysts tend to be very critical of this one. They don't seem to like the way it's run. Not me. I've liked it since 14. I like a double. What else? We have two critical analyst meetings on Wednesday, too. Best Buy and VF Corp. Both companies are uniquely tied to the domestic economy. I bet they say very good things. Best Buy is selling lots of gadgets, and it might give us some insight, by the way, into the iPhone 11. VF Corp is the strongest apparel play, and if the Vans story stays hot, their sneaker business can carry the whole darn company. Like them both. Thursday, we hear from Accenture, ACN. By the way, if you ever try to put it in, spell check always makes it be CAN. So you got to back up and do ACN. You got to do it twice. And this stock has been a horse with periodic dips that usually coincide with the day it reports. That's right. They report, and it's suddenly it's like doing well, and that's where you got to buy. Okay. Now, ConAgra reports too, and this one's a real conundrum. Great management, good brands, iffy results. I think they figured out what's wrong. I think they can nail this quarter. I really do. After the close, we have the most controversial quarter of the week, and it's Micron, the commodity semiconductor name. They make flash and DRAM. Several analysts bulleted this morning, claiming that its two key products are actually turning positive, or they use the term inflecting. They never want to say turn positive. They always say inflecting. But this stock's had a remarkable run. So unless Micron says they're seeing strong demand for both flash and for DRAMs, I think the stock's gains are going to be rolled back, especially if they mention anything about trade tensions in China. That'd be the kiss of death. Why is Micron so important? Simple. It makes the basic building blocks that go into almost every device you can imagine. There could be huge, and I'm talking about monster pin action off this one. So you need to parse everything the company says and take any usually positive commentary with a grain of salt. I think the long knives are out for the stock at this level. I mean, I detect it. Long knives, Micron. There's no such thing as a lock in this business. I mean, there's nothing like you take the pats and give zero. But I'll tell you that on Friday, Boston Scientific holds an analyst meeting. This medical device maker rarely misses and almost always has some new breakthroughs that they announce at these meetings. I am a huge fan of the device business. You know, Abbott's my fave. I think I'm a big backer of Edwards Life Sciences. How about Medtronic in January, where I had to tell the CEO that he should like a stock more? Now, there's no economic sensitivity here for Boston Scientific. No China worries. Halcyon. One last thing. A bunch of Fed heads talk next week, and I'm begging you not to listen to them or any reportage about them. See, I got a rule that served me well for many years. Never pay attention to the droning of any Federal Reserve official who speaks within 2 weeks after the Fed has already spoken. There's never anything revelatory. It's just a bunch of pop-offs who confuse you. The Fed just spoke 2 days ago, for heaven's sake. Don't let these guys throw you off with their jibber-jabber and their faux drama. I have said for years that they shouldn't even be allowed to talk as individuals because, you know why? The individuals are so discordant, they confuse you, and they make you leave the stock market. Here's the bottom line. As we head into next week, remember that we don't have one economy. We have an economy that's balanced on a knife's edge, two of them, a domestic, okay, and that's strong, and an internationally oriented one, and that's in much worse shape. That's the right prism to use if you want to understand this market. That's from when Billy says we're all going to die in The Predator. And if you look at today's market, the bad part of the economy, well, what can I say? As of 3 o'clock today, it's suddenly in control. Let's take calls. Let's go to Dan in Ohio, please. Dan.
Hey, Jim, how you doing?
I don't know. I'm trying not to catch a falling knife, Dan. What's happening?
My question is about Ollie's Bargain House. I bought it, had some bad earnings, fell about 30%. Should I dump it, or do you think there's...
No, I don't want you to dump it, but this is a stock that I get asked about a lot, and it's really incredible. And I am myself confused. I'd like to see Mark back. It was not a good quarter. I am telling you, it was not a good quarter. And the selling was right. So now we have to wait a full quarter to see if things get better before we make a move. My plug fell out. I don't want my PC to die. This is probably more information than you need. Anyway, today's sell-off did make sense. But please do yourself a favor. Don't listen to any Fed talk for the next 2 weeks. Do one of these things that my daughter does. I'm not listening. Anyway, on Mad Money tonight, the trade war is taking a toll, but not where you'd expect it. I'm reviewing not one, not two, not three, but 4 stocks to watch on China headlines. Then there's plenty of action in the pharmaceutical space in recent months, with Bristol Myers and AbbVie both making big acquisitions. I'll tell you which could be the better bet for investors once their deals close. And Zscaler, how can I help you? Stock recently suffered its worst day since going public in 2018. But could its recent turnaround signal a time to buy? I've got the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.